The US dollar has been showing serious weakness recently, and it's not just normal market movement. In 2025, the dollar fell about 9 to 11% against a basket of major currencies. That's one of the worst performances in decades. This decline is not happening because of small issues, it reflects problems in both domestic policy and global confidence. The United States has made decisions that hurt trust in its economic stability, including unsound monetary policies and political unpredictability. On top of that, other countries are increasingly realizing they do not need to rely so heavily on the US for trade, for financial stability, or international influence. This combination is making the dollar lose ground. Investors and governments are looking at alternatives, including local currencies and gold and other assets, because they want more independence and predictability. So, this is a shift that affects the global system. The US has held dominance for decades, but the mistakes in policy and the way it handles geopolitics have caused other nations to rethink their dominance. The confidence that used to support the dollar is eroding. And this is a serious issue, not just for markets, but for the way countries organize trade and plan long term financial security. The decline of the dollar is driven by a mix of leadership instability and economic fundamentals. Political swings from one administration to the next make international partners unsure about the direction of US policy. Decisions on spending, interest rates, and international agreements are unpredictable. So, this makes it harder for countries and investors to plan, which in turn reduces demand for the dollar. Economic fundamentals are also a major factor. So, with high debt levels, budget deficits, and continued reliance on borrowed money, weaken the dollar's credibility. Meanwhile, countries are forming stronger trade and financial alliances outside of the US. They are building alternatives so that they are not dependent on one country for survival or growth, right? Historical patterns of exploitation by Western powers have made these nations pretty cautious, so they want control over their own resources and their own systems. And as the dollar weakens, it becomes clearer that nations can benefit by creating independent systems using their own currencies or diversifying into gold or other reserves. So this approach reduces reliance on the US and makes the global economy less dependent on one single country. Ordinary people in these countries, it would mean more stability and more control over the economies, while the US may face internal economic challenges as its influence declines. Major institutions and investors are already acting on this change. Pension funds and investment firms, including some large ones in Australia, have started reducing exposure to the US dollar to manage risk. This is part of a global trend where investors want to avoid being overexposed to a single currency that is losing trust fast. Central banks and foreign governments are also changing the way they hold reserves. India, for example, has reduced US Treasury holdings and invested more in gold. This shows that nations are taking steps to protect themselves from potential dollar instability. So, precious metals like gold and silver are increasing in demand because they are seen as safer stores of value. European economists have even publicly suggested repatriating gold held in the US, which shows that governments are questioning the security of keeping assets in the US financial system. China is also strengthening its currency against the dollar, signaling that it's prepared to support alternatives to the US dollar in global trade. These movements indicate that the world is preparing for a long term shift away from reliance on the dollar. This is not just a temporary trend or reaction to market fluctuations. It is a structural change in the global financial system. The US cannot rely on its historical dominance alone to maintain its influence. Other countries continue building independent systems. Okay? So this shift has real consequences for ordinary people, not just governments or investors. Americans are likely to feel the impact through inflation, weaker savings, and higher costs for imports. Even though billionaires and large corporations can often protect themselves, the average citizen will experience the consequences first. On the other hand, countries that reduce their reliance on the US dollar may gain more economic independence and stability, even using local currencies in trade or diversifying reserves allows nations to have more control over their own economies. It also reduces the risk of being punished or coerced by global powers for political reasons. If more countries can continue moving in this direction, the US dollar will lose its ability to set global terms and influence economies abroad. So, this creates an environment where trade and finance are increasingly negotiated among nations with comparable power rather than controlled by a single currency. Ordinary people everywhere will see the effects through prices, access to resources, and opportunities for economic growth. The dollar's decline is not just about random numbers on a chart. It affects real life conditions for millions of people, and the direction it moves in 2026 will have consequences for global trade and global governance. One of the biggest impacts of the dollar's decline is the way it shifts global power. Nations that used to rely on the US for trade and financial stability are now exploring new partnerships and local currency systems. Countries in Asia, Africa, and South America are actively negotiating trade deals that bypass the dollar, creating independent financial networks. This reduces US leverage and forces other nations to recognize that influence cannot be maintained by history alone. The decline also challenges the US's role in setting global economic rules. International organizations like the IMF and World Bank have long been structured around dollar dominance. But as countries diversify, those systems become less effective. Governments are aware that reliance on a single currency exposes them to external risks, whether from policy changes, sanctions, or economic crisis in the US. By moving toward local currency trade and alternative reserves, nations gain flexibility. They can protect themselves from sudden policy changes in Washington or shifts in American leadership that historically have caused volatility. For the US, this is a warning. Dominance through monetary influence is not guaranteed. Countries now have tools, they have the knowledge and networks to protect themselves. If the US continues to ignore the structural reasons behind its weakening currency, it will gradually lose the global advantage it once had, leaving ordinary citizens to deal with the consequences first while the rest of the world adapts. The role of alternative currencies and reserves cannot be overstated. China, Europe, and India are investing in stronger local currency systems, gold, and other assets to reduce their reliance on the dollar. This is part of a broader global trend toward decentralization in finance, and it is accelerating. Countries that embrace these alternatives gain independence in trade and finance. They are less vulnerable to US monetary policy, interest rate changes, or political interference. Meanwhile, Americans are likely to experience the first signs of instability in daily life through inflation, higher import prices, and weaker savings. Markets will respond to these pressures, and those who are not diversified may lose out. The reality is that the dollar is no longer untouchable. Its dominance is declining fast, and nations are preparing for a new monetary order where power is shared more widely. This does not happen overnight, obviously, but the steps taken now by governments and central banks and investors indicate a clear trend. If the US fails to adapt and continues unpredictable domestic and geopolitical policies, the dollar will continue to weaken. Consequences will be structural and long lasting, affecting everything from international trade to the economic opportunities available to ordinary people inside the US and even abroad. At the end of the day, the decline of the US dollar is a signal for global change. Countries that diversify, that use local currencies, and protect their resources will gain more control and resilience. The US still feels powerful, but its influence is no longer absolute. Ordinary Americans will experience the effects first, while other nations benefit from creating independent systems. The era of unquestioned dollar dominance is ending, and nations are waking up to the need for sovereignty over their own economies. It also forces a bigger question. Can the US adapt to a world where it is no longer the central financial power, or will it cling to all dominance and face longer term consequences? For the rest of the world, the focus is on building resilient trade and financial networks. This shift affects ordinary people, governments, and businesses alike. It's not only a focus on markets or economics, it's also about how nations define their independence and security in the 21st century. So the question now is simple. Will the US adjust its policies and maintain its credibility, or will the dollar's decline mark a permanent realignment of global power and finance?